Okay, so we need to talk about something absolutely wild that we discovered while studying Earth's financial systems. There's this human they call the Oracle of Omaha, and he's literally been using the same investment strategy for like 70 years. And everyone thinks he's a genius, but here's the thing. He's put exactly 0% of his portfolio into asteroid mining operations, quantum probability funds, or interdimensional real estate. And somehow, this is considered wisdom.
Wait. You're telling me this Warren Buffett guy has never once considered investing in off-planet assets? Like not even a small position in lunar helium-3 extraction?
Not even close. The man is worth over $100 billion, and his entire strategy is basically buy boring Earth companies that sell sugar water and insurance policies, and then just sit there. For decades. Our analysts initially thought this was some kind of elaborate performance art.
That's actually insane because back on Kepler 442b, we have this saying that translates roughly to if your portfolio doesn't span at least 3 dimensions, you're basically financially illiterate. But okay, I'm curious. What makes humans think this approach works?
So here's where it gets interesting. Buffett's whole philosophy centers around this concept he calls the circle of competence, which means only invest in things you actually understand. He buys companies with strong fundamentals, predictable cash flows, and competitive advantages that last for years. He's famous for avoiding the dot-com bubble that destroyed so many Earth investors in the early 2000s.
Okay, that's actually kind of smart in a primitive way. It's like how we teach our younglings not to engage in trans-dimensional currency speculation until they've mastered basic 4-dimensional economics.
Yeah, exactly. And the numbers don't lie. His company, Berkshire Hathaway, has returned an average of about 20% annually since 1965, which in human terms is absolutely extraordinary. Most of their professional investors can't even beat the market average of 10%.
But hold on, 20% returns when you could be getting 2,000% returns from properly timed investments in emerging planetary civilizations? That seems like he's leaving massive amounts of money on the table.
That's precisely the critique we're making here. Buffett's portfolio is heavily concentrated in these Earth-bound sectors, like financial services, consumer goods, energy, and insurance. He owns huge stakes in companies like Apple, Bank of America, Coca-Cola, and American Express. All solid businesses, sure, but they're constrained by this single-planet growth limitation.
Right, because from our perspective, any investment strategy that doesn't account for potential asteroid impacts, solar expansion, or species migration to other star systems is fundamentally flawed. It's short-term thinking disguised as long-term strategy.
Exactly. And here's another thing that's fascinating. Buffett's obsessed with what he calls intrinsic value, which means he calculates what a company is actually worth based on its ability to generate cash over time. And then he only buys when the market price is significantly below that value. He calls it buying with a margin of safety.
Okay, so he's basically waiting for other humans to panic and sell things cheaply, and then he swoops in. We have a similar concept with our fear harvest investment protocols, where we capitalize on the emotional instability of less advanced species during market corrections.
Yeah, but here's where his lack of imagination really shows. He applies this value investing framework exclusively to traditional Earth corporations. He's never once considered that the greatest margin of safety might come from diversifying across multiple planetary systems.
That's a massive blind spot. Like on our homeworld, we learned this lesson after the great solar flare of cycle 7, when investors concentrated in our primary star system lost everything, while those with holdings in the Andromeda colonies preserved their wealth.
And get this, Buffett actually prides himself on his concentrated portfolio approach. He has this famous quote where he says diversification is protection against ignorance, and that if you know what you're doing, you should put significant amounts of money into your best ideas.
Which works fine until it doesn't. I mean, yeah, if you're operating on a single stable planet with relatively predictable economic cycles, maybe you can get away with concentration, but that's such a fragile strategy when you zoom out to a cosmic timescale.
Totally. Now, before we go further, make sure you're hitting that like button and subscribing, because we're going to keep analyzing these bizarre human financial behaviors, and you definitely want notifications turned on for when we break down why cryptocurrency is somehow both revolutionary and completely missing the point of actual decentralized galactic currencies.
Okay, so we've established the Buffett strategy works within its limited context, but fails to account for existential risks. What should humans actually do with this information?
Right, so let's break down the actionable protocol here. First thing, humans should absolutely adopt Buffett's circle of competence principle, but expand what they consider their circle. Instead of just thinking about Earth industries they understand, they need to start educating themselves about space economics, asteroid mining feasibility, and off-world resource allocation.
That makes sense. It's like when our species was transitioning from single-planet existence to multi-system civilization, the investors who took time to understand the new paradigm early were the ones who built generational wealth.
Exactly. Second actionable step is to maintain Buffett's discipline around intrinsic value and margin of safety, but apply it to emerging technologies that have extraterrestrial applications. Look for Earth companies that are building the infrastructure for space exploration, satellite networks, or advanced propulsion systems. These businesses might look overvalued by traditional metrics, but if you're calculating their worth based on a multi-planetary future, the numbers change dramatically.
So basically use his methodology, but adjust the assumptions to account for a bigger playing field.
Yeah, precisely. And the third thing is to create what we'd call a temporal diversification strategy. Buffett invests for the very long term by human standards, like decades, but humans need to think in terms of centuries. That means putting some portion of wealth into assets that will appreciate as humanity expands beyond Earth.
Which is hard for humans because they have such short lifespans. Like, how do you convince someone to invest for a future they won't personally experience?
That's the psychological barrier we're trying to break through. Buffett actually does think generationally, which is admirable, but he's still trapped in this Earth-centric framework. Humans need to adopt that generational thinking, but expand it to include their species' inevitable movement into space.
Okay, but let's be real for a second. Most humans listening to this are probably thinking this sounds completely insane. What do you say to the person who's just trying to save for retirement in 30 years?
Fair question. Here's the thing. Even if you think the space economy is decades away, the companies building that future are investable today. You can buy stock in aerospace manufacturers, satellite operators, and technology firms developing the tools for space exploration right now through normal Earth stock markets.
And honestly, even if the space economy never materializes in the way we're describing, many of these companies will still generate solid returns because they're also serving Earth-based markets. So you're not actually taking on as much risk as it might sound.
Right. The real risk is doing what most humans do, which is ignoring exponential technological change until it's already happened. Buffett made his fortune by recognizing value before the crowd did. We're saying apply that same principle, but look further out on the horizon.
So respect the simplicity and discipline of his approach, but reject the artificial limitations he places on where value can be found.
Exactly. And here's the existential piece that humans really need to grapple with. Buffett's success is built on this assumption that Earth-based capitalism will continue functioning more or less as it has for the past century. But that assumption is increasingly fragile.
Because you've got climate change, potential conflicts over resources, technological disruption happening faster than institutions can adapt, the stable foundation his strategy relies on might not be stable much longer.
Precisely. So, the philosophical question becomes, do you optimize for the world as it has been or the world as it's becoming? Buffett has optimized brilliantly for the past, but his framework doesn't account for the fundamental transformation humanity is facing.
Which is why on Advanced Worlds, we teach investment philosophy alongside astrophysics and evolutionary biology. You can't make good long-term financial decisions without understanding the larger systems you're operating within.
And humans are just starting to grasp this. Buffett represents the absolute peak of single-planet investment thinking, but he's also showing the limitations of that paradigm.
It's kind of beautiful in a way. He's simultaneously the best example of his approach and the proof that a new approach is needed.
Yeah, so look, if you found this analysis helpful, definitely check out our other episodes where we break down human inefficiencies in everything from education systems to romantic relationships.
And drop your questions in the comments. What other human systems should we be analyzing? We actually read these and they help us understand what humans are confused about.
Also, just as a reminder, make sure you're subscribed and you've got that notification bell turned on because we're dropping new episodes constantly and you don't want to miss when we explain why your retirement planning is based on assumptions that won't hold for another decade.
Before we sign off, though, I just want to say there's something admirable about Buffett's consistency. The man has stuck to his principles through multiple market crashes and massive social changes. That kind of discipline is rare, even among advanced species.
Totally agree. The critique isn't that he's wrong, it's that he's constrained by the limits of his context. If Buffett had been born on a multi-planetary civilization, he'd probably be the Oracle of the Orion Arm.
Which honestly would be fascinating. Imagine Buffett's analytical framework applied to investments spanning light years.
Maybe in another timeline. All right, that's going to do it for this episode. Remember, humans, respect the fundamentals, but don't let Earth's gravity well trap your imagination.
Stay curious out there.